Let's talk about risk management here for a bit. Some of you guys who have a smaller account, I don't know who has what. And it is just not my job to ask people how much money do you have but I will tell you what I do and what works for me over the years, how I manage portfolios for me, for my clients on the side, and how I do day to day, like swing trading. And I don't even know when was the last time I ever had a day trade, but it's mostly swing trading. And how I managed to build the left side, which is your equity side, and then on the right side is your options, right? So this account is my wife's account, is under her name with $100,000 capital here. Okay. So the she tells me like, hey, I have 100 grand. See how much you can make me every year. I was like, okay. I have my own personal account and I have a retirement account, IRA and the Roth IRA. A Roth IRA, I really like it because all the gains you get to keep them and you don't have to pay any tax on it. So, and those works really good with indexes, especially S&P trade if you trade S&P cash, NDX cash, Russell. So all these indexes there works really good if you have a Roth IRA account. So if you do happen to make any money on those trades, you just basically get to keep them and until the age of 59 and a half. So the traditional IRA account, if you have money there, like if you're trading on the retirement account, you can build it up just like your 401ks. But at the age when you're gonna get to that 59 and a half years of age, and then if you're gonna make the withdrawal, you gotta have to pay tax because you're not paying taxes now to contribute your 401k into those mutual funds. But older and older you get, by the time, age by 60 years old, your tax bracket goes lower, right? You don't get taxed high. So I don't know the retirement. I mean, I know a lot of people retire at 660, some goes up to 65 and some, but you're gonna be pretty much like, like if you get to that age and if you happen to be at the job for a very long time, you could stay for another year or two or so. But if you are 50 plus or 60s, if you're into a 60s, I mean, who's going to hire you, first of all? It's very difficult to find a job for a 60-year-old guy or a woman. So you're pretty much out of gas. So you have no energy and, you cannot hustle as much as a young person can do the work and things like this. So, um, what I do here, I mean, you could have two accounts, or you can just do it, or you can just manage it with one account. But I'm just gonna give you the example based on $100,000 account, and it could be 70,000, it could be 80,000. I don't know. I mean, I don't know what to tell anyone. So if you have 60 or $70,000 account, it's gonna work the same way. Okay, so don't you don't look at the dollar amounts, like how much you're making, but you will average out over time, and your returns are always based on your percentage, right? So if you have $1,000 trade, if you happen to make 10%, it's $100. And if you have a $2,000 trade, you happen to make 10%, it's $200. So the 10% is the same thing, It's not about the dollar figure. So bigger the risk, bigger the reward. But if you have a if you think that the option premiums that you're buying for like $3 that it could go to two times or three times, your odds are very low, because $2, $3 premiums, they could go three, five, 10, 15 times in the money, but the probability is very, very low because if you know you have to look at that way because if you paying for the premiums, you are more directional going either up or you just buying puts to the downside. And if you happen to catch the move, yes, the reward is there. But most of them, they just get burnt, you know, especially a week like the week we just had. I mean, if a price managed to stuck in the inside bar based on a week, I mean, you will like when I look at the prices and every which well, I watch the market every day. By Wednesday, if I will see a certain stock, like especially like Mag 7, and if like S&P, like all the overall indexes and ETFs, by Wednesday, I would say around like noonish, kind of like around like, by close by the close, I will have a pretty good feeling that how the week is gonna get end, because market or like Mag 7 stocks, especially these trillion-dollar market cap companies, they don't take days or weeks to either move in either direction, meaning because these stocks are huge, these companies are, I mean, better than cash machines. And either way, I mean, these stocks will make a move in 3 to 4 days, in one week, I'm talking about. So your odds of for these stocks to be in the inside week is very kind of rare. It does happen, but it doesn't happens that often, because these stocks have a lot of volume, has a massive market cap, so they're gonna move with the market, So, but the same thing with the weeks as well. Like if I mean I can show you here, like if you let's look at the SPY, right? So now you can look at this that if if we have this is the inside week, the black bar. Now if you're gonna look at this, like, okay, when was the last time we had an inside week? Uh, right here, okay, which was back in March of 2024. You see? So what does that tell you? I mean, market moves in either direction pretty much every week. But look at the time duration you the with the inside week that you have here. It's no either every week we're either making new highs. Here we had a dip for 3 weeks of 5.9% decline. Then we managed to rally up 14.4%. Then we took another dip of almost 9.7%. And then, and then we're just like keep going up and up. So the trend is up, okay? You're making higher highs and higher lows, right? Because none of these lines are taking out those previous lows, as you can see it. It is trending up. So the point is like you can see that how rare, okay, is for SPY, Qs, IWM, and the diamonds that we just, we're looking at those ETF, are these inside weeks are so rare. They're very choppy. And if you have your portfolio or if you don't trade options, then you're totally fine with it, right? Because you're not fighting time. But then if you have option positions open and if the market is not trending either higher or lower, I mean, none of the stock's gonna run, because if if the if the large cap, which is your main benchmark, which is an S&P 500, is not moving in either direction, what makes you think that the rest of the Mag 7 stocks is gonna explode in either direction, The index has to move. It has different, like I mean, if you just wanted to talk about S&P 500, S&P 500, and then has an S&P 1000 and an S&P 1500. I mean, you're talking thousands of stocks that are trading within the same, you know, in the same benchmark. So if the entire benchmark is it's literally stuck and kind of moving sideways, so it's not really smart to really throw money up on the board and thinking like, yeah, my position is gonna reward me really big because I'm in, you know? Because the only euphoria right now going on is it's all in crypto. You know, all these MSTR and and the Bitcoin. So everybody first was focused on uh, on Nvidia earnings, and Nvidia is gonna come. Well, what I mean, the thing is this: their Blackwell production is going. I mean, the company is making crazy amount of money, and all the the those Blackwells, they're all in productions right now, and all these companies are like, you're talking Amazon, you're talking Microsoft, you're talking all these companies are buying Blackwell. But I mean, you have to think and look at the potential. Like this company is it's like pretty much every other company is fully rely on AI and Nvidia right now, you know? And so, I mean, the overall, like you can see like how it doesn't happens that often. Like here, you have an inside week here. There's one previous one was back here in March 15th, and then you had one back here September 8th of 2023. Look at the time duration. Like you're talking months. Okay. I mean, so if we do, let's do year to date high and low here. So okay, so this is the year. So that's the high, right? Let me change the color to blue. So this is the high. This is the low of the year. So in this year alone, this is the inside week, and we had one back here in March. That's it. So what does that tell you? Market is making a pause. It's one here as well. Sorry. So there's three of them. There's one here, black one. There's one here in April, and there's one here we just had. Just 3 weeks for the whole year so far. And how many outside bars that we had in this year? Meaning that goes up and down. The blue ones are this one and this one. Only two. So we have three inside weeks and we have two outside bars for the entire year. Other than that, I mean, market just trending up higher and higher. Like here we have one, two, three. This is where we started the year. One, two, three, four, five, six, seven, eight, nine. One sideways. 10, 11 weeks. This is 11 weeks right there, as you can see. This is what you want to trade. Either on a stock or it could be anything. This is where you make the most money. If you could able to find a stock that could run for like 7, 8 weeks in a row, you know? I mean, it if you have options, you happen to rush and say like, hey, okay, well, it's been up for like 3, 4 weeks. I can just take my profit, right? If you have, this is definitely like a third wave, you can say, because third waves normally runs for a long time. It has a much longer time duration compared to your wave 1, 2, 4, and 5, because third is always, is the longest wave. It cannot be the shortest wave. So, and most of the third waves and the Elliott is always going to have acceleration gaps because the price is pushing as quick as every day. right from the start. So when you have a price on a chart that trends for that many weeks in a row, I mean, you can just literally say it's like this is 100% a third wave, okay, on on your wave count. Because if the price starting to go sideways and stuff, then you can make a case of like, okay, you are, they call the distribution phase in the market. Is this where you can make the case like, okay, yeah, it is, there's some sort of a consolidation going on. Is this where the distribution is? This where the fourth wave is coming into a play, and those are the nasty ones. They will suck you up like, ugh. Yeah, I hate trading fourth waves, but because when you happen to find the price has the initial move to the upside, price takes a pause, either it goes sideways or it corrects against your trend, and then you just, because the next thing that you have is that your 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 1 degree, the a trend wave still needs one more push to make 5 waves to complete one, right, to the one higher degree. So you're looking for that fifth wave now. And then the fourth wave gets really bit challenging, and kind of because it moves around in many directions, and you're always like sitting and scratching your head. Is like, what the heck is going on? So you're always thinking, is it an ABC? Is it a WXY? Is it a triangle? It's like blah blah blah. So there's so many of them because corrections are very, very subjective, you know. I mean, I wish that you had the initial trend up and then it just corrects lower and ABC, you just done with it and find retracement, just buy something and just rally right back up. But that's not, I mean, it happens, but it is not very often that you just simply get simple ABC move and you just buy something and boom, it just go right back to the highs. So there's some positions you just gotta have to fight, and some of them the where price has to fight, and there's some of them you just gotta have to be patient and just have to wait. That's all it is. It's just the waiting time. Um, so I mean, look, the price. I mean, what do we have now? Next week we have Thanksgiving. Um, Today is the 23rd. 25th is Monday, Tuesday, Wednesday. So we're going to lose a day next week. So we're going to be 4 days of trading. Um, and then we go into a December. So is the market just buying time, staying sideways? That's what it looks like. But it's sitting right near at the highs. And then we have December, and then just consider 2 more weeks of December is pretty much that you're gonna see some action, you know, and then it's just the holiday season. A lot of these guys will just start taking time off, and then you have Christmas, and a lot of people will look for the Santa Claus rally that actually it doesn't go for the whole full month. It actually starts right the next day when the market opens after Christmas until the New Year's Eve is the call Santa Claus rally. So, I mean, last many Decembers has not been really strong, powerful months, but we'll see how the next 4 days goes, and then I'll just go from there. I'll see if I open, what did I open yesterday? Coin. Uh, yeah, coin. Um, I only did two. Um, just a crazy premiums on those. It's just MSTR, and it's just they're like premiums are so elevated. Um, I held two on Tesla, closed three. I have five on this spread. So I closed three, I held two. So I got two here. I got four on the other account, and then AMD is this one is kind of. We'll look at the chart. a horrible performance for this stock for this year. Cannot really compare to all the other semi stocks. I mean, TSM and Broadcom and Nvidia, of course, is a leader. But the Lam Research, AMD, Intel, like these companies are just completely, wiped off the entire run for the year. I mean, there's no like I don't see much negativity about AMD unless I don't know, like it's just either somebody's like dumping bunch of stocks by the end of the year on AMD or something, but it's really not performing at all. I mean, it has overall, if you look at the AMD, it has a very good returns over the years, but uh, but it's not a very strong AI name, in my opinion. I would, if I would have to bet or willing to think like if I'm bullish on AI, I would just stick with either NVIDIA and Broadcom. That's all. And ASML. ASML, I don't know if some of you guys know or don't like, they have machines that that they might be selling to Taiwan Semiconductor. They have those. I mean, I don't know. You can Google some image if you like. I mean, ESL machines are huge. Well, they make those chips. So it's a very strong company, but that company got hit pretty hard. So that one is down as well. So what do you want to sell? Well, how you determine the theta, how much, well, you have, if you analyze your trade on the option, it gives you because you have four Greeks options, okay? You have to remember basic 101. Options, Greeks, there are four of them. One is the delta, right? That changes, whatever long delta that you are. If you're long delta 50, if the underlying stock moves 1 point, it pays you $50, okay, within the same day. If it moves 2 points, it pays you $100 because you're long 50 delta. Then the second Greek is theta. Theta is the time decay, okay, because this options, it has the expiration date on it. It is when the premiums will expire. So it has the time decay that is costing you time to hold those premiums. Okay. So if you open a position today with 50 delta, and if you have a 40 negative theta against you, and if a stock managed to go up $1, you see a $50 that you made for the day, and then you end the day, right? And then the next morning when the bell rings, that 40 that you held those premiums overnight will uh, uh, is going to be out of your position. Now you're back to $10. Okay, as if the stock can stay where it is, but you have to pay that $40 because you're negative theta because of the passage of time, right? So the stock can move 2 more points now. So now you're back from $10 back to 50, and then you're back to $110. So every day that you're holding those premiums, okay, you're gonna pay that theta every single day. So and then you have what do you have? Delta, you have a theta, which is a passage of time, and then you have vega. Vega is your volatility, okay, and what else they have? God, I forgot. So you have delta, theta, vega, which is your volatility, And then you have a gamma. Gamma works the same way as a delta. God, I can't even think anything right now. Let me do this. Let's see. Show you the. uh, Let's do this. I can't, just too early for me to use my head. Here's your delta. Okay. Determine how much an option price changes for every $1 change in the underlying asset. Here's your gamma. Gamma works the same way. How much is an option delta changes for every one. So gamma and delta is pretty much the same, right? But if you have now the gamma, if you have a butterfly trade on and some sort of the spread, so then the last days is when the gamma comes in into a play, the last day or two. That's your theta right there, that measure how sensitive an option price is to the time remaining until it matures. Theta is also known as a time decay. Okay. And then you have vega, which is your volatility. Measure how sensitive an option premium is to the potential fluctuation in the underlying stock. A high vega indicates that future outcomes are less, you know, predictable, which will cause the option premiums to increase. So if you have a call options, and if you're gonna have a spike in volatility, okay, remember when you look at the options, it has those IVs and stuff. So then what happens is your premiums get very expensive, okay, because now you have volatility against you. So if you look, I learned options years ago. I mean, I learned by doing spreads, and and to me personally, I always think the spread has much better probability to make money over the long run, and other than just to buying calls and puts every day or so. All because those ones you just fighting time, you know. Your spreads has a time decay as well, but is not as much as the single call and puts have. So there's a difference there. So what you're trying to do is like when you buying options, you're looking to go up, right? And you says like, okay, well, I'm here and I want to get here. Okay. So this is November 23rd. And you says like, okay, I will go out to December 23rd. Now you have this much time. So you want to move from here to here. So now you pay a premium, which is cost you $5 on a single call. So now a $5 premium, now you says like, okay, I have 30 days. Okay. Now based on my technicals, the price that I'm paying right now, which is $5, of the current whatever the price is on the stock that you're buying. Now you want to move as quick, as fast as you can, okay, to your target. Now you starting to move. Now you're starting to go down. Then you're starting to go back up. Then you flush, then you get another flush out. So whatever the fluctuation that you have here, okay, that's going on between from here going to your target, it has the time decay, okay? It has a time decay. So the time decay on the $5 premium, just giving you an example. Let's say you long 50 delta and you pay $5 for one contract, okay, from here to here. So the 50 delta if you have, it will have pretty much close to 30 to $35 worth of time decay each day. Okay. So meaning that every single day that you holding this $5 premium is costing you $30 per day. So if you're going to now, if the trade moves here, now this $5 premiums went up to 6.5. Okay. She made $150, right? So from 500, you made 150. So if you have 150 and then 3 o'clock the bell rings, and then you says like, well, I haven't get here. I still have a lot of time, and my position is up. I understand. I can see it. But now I made 150. And then on Monday, when the market opens, that 150 will turn into 120 at the open, because it's the passage of time, is this theta right there of 30 is going to get added right back here. Now you add back to 120. Now that 120 say like, okay, can I get more upside? You get another 1 point move. So the 150 becomes 170. So you get another 50-point move. Okay. So that 170 from here becomes 220. Now you says like, okay, I'm still holding because I'm still going. Well, no, the price looks good. There is a potential that we can go and hit our target. Then you hold it for another day. So that 220, okay, is gonna, the next day when the bell opens, it's gonna put you right back at 190. So this time decay that you have, that you holding that premium, is costing you every single day just to hold that premium on a single call. Okay. So you could be up from $5 to $9. Okay. The theta will decrease just a little bit. Now says like, okay, now your $5 premium that you bought went to 9. That's what, $400, right? So that theta right there, which you have for $30, is gonna probably gonna come down probably like down to $27 to $28 now. Okay. So now if you're gonna hold it for another day, so every day you're gonna be you're gonna be paying that $27 each day. Okay. This is what most people don't understand, who's just sitting and fighting time every single day. This is what is killing every single one of these premiums, because you have to look at this way: the premiums have the strikes which are in the money. Okay, you have two sides. So you have calls and you have puts. Oops. So the calls, anything right there which you have middle line, is going to be your 50, right? Which is your fifth, like at the money strike will have 50 delta. Down below here is going to have 35, and then you have 20, 25, things like, and then further you go down. So the stocks there are in the money. So it will be 60 delta, 70 delta, 80 delta, 90, and 100. 100 is where it caps. It don't go higher than 100. So if you buy anything at the money, it's gonna have a time decay for sure. But then if you buy anything deep in the money, meaning it's gonna have much higher premium, it's gonna have a lot less time decay. Okay. Why? Because these options which are in the money, which has 60, 70, 80, and 90 deltas, they have a lot more intrinsic value. Okay. So the options which are in the money have intrinsic value. Options which are out of the money have extrinsic value. Okay. So these Greeks, you just have to, not this one, don't worry about gamma, this and this. So when you, every platform that you have, okay, it could be a thinkorswim, it could be, I mean, um, the whatever interactive broker or TST trader, whatever that you guys use, okay, it has analyze tool. When you analyze your open position, it will, like, tells you what the, well, you should know what you're paying upfront when you're opening a position. And then you should know, like, okay, what is my time decay, which is your theta, and what is your vega. Okay. So these are the only three Greeks that you just have to keep an eye on the open position. So longer and longer, well, because again, you have to look at this way that trading is only a probability. Okay. There's no such thing that is gonna be a guaranteed return on your money. I cannot tell of the world or to anyone like, yeah, this is gonna be the way to go. And this is, this is gonna be, is gonna go my way of this, there there's certain people are so sure about, like, oh yeah, this is the top and this is the bottom, and yeah, we just gonna go there. Like though that kind of talk. Um, so you just gotta have to watch the you have to know like what you're paying, what is costing you per day just to hold that premium. If you if you buy a $5 premium and if it happens to go up to seven, right? So that's $200. If that happens in the next 15 minutes, as soon as you open a position, I mean that happens. How many times that have happened? Like, I open a position that instantly start moving right away. But it doesn't happen that often. But you do come across those trades as well. Like here you open the position, boom, here goes your 15-minute bar to the upside. I mean, I don't know. I mean, I've had many, many trades like this, and then it just started to trend. So some of these trades that you can perfectly time them really good, that the minute you're gonna buy those premium and then those premiums is gonna explode. And if that happens, you can just literally sell it, take your money and run, you know? And because if because you have to look at this way that I'm in a trade and I'm telling you, and like, set your price alert here and set your price alert here, right? And I give you that print. Why? Because I have a plan. I have a target. That's what I wanted to go and hit my target. So if you don't have a plan before you're gonna put your money up in the front on the line, then first of all, why you are even in the trade if you don't even have a plan? If you don't have a target set on your trade, why you are in the trade? I trade based on Elliott wave. I take trades on based on Gann swings. I have I can draw my fibs from the swings, but most of my trading, you can say like 99% of my trading is all based on fibs. I don't rely on any move indicators. I don't rely on any, I mean, I do watch VWAPs and moving averages and things like this, but my price, I am all about fibs. Okay. It took me a long time to master these fibs. And many of you know that these, when you break the green line, what I tell you, the breakout level is where you want to get to your next level that hits almost to the penny. most of the time, as many of you guys know that. I don't have to explain and prove myself to anyone. My targets will hit to the penny. We did it yesterday with Tesla. We had a trade yesterday with Tesla. I mean, we had an open trade and then it happens to move yesterday. And I says like, and I do the little, the screenshot and it's just like, okay, here's the fib print. So those fib prints are my targets. So if my target hits, if I'm in a trade, I'm gonna start booking profits. Like, okay, let's cash out something. Well, now if you are sitting with the hope is like, well, I'm gonna have a 10% more upside because the wave count says this and the swing says this and my technical shows that. I mean, if you're doing that, if you have multiple charts circling in your head all the time, is like, should we go to 340 or 370 or 3? I mean, we can, but you have to act on your way to says like, hey, my initial target is this. If I hit my target, I'm good. You should feel happy about that trade, that your trade played out exactly the way you laid it out. But then you just sit in with the greed, like, yeah, if it's gonna hit, and then I didn't sell anything, and then it happens to go up even more, and then you just get in all jumpy and all happy that, yeah, we just keep ripping to the upside. I mean, yes, this is why, I mean, there's certain stocks, especially stock like Tesla, is if you have shares, you let those shares ride. If you have the option, you close the option when you if you have your target. That's how you play both sides. Because if you so it means that you're not losing any more upside because you have shares that are going up and you hit your option trade at the same time. So longer dated leaps, shorter dated options. Look, the time for swing trading. Swing trading is good on a 1 hour time frame. 1 hour time frame is really good for swing trading. Okay. And if you are looking for this day-to-day price action from like, well, I want to catch 2 points on S&P or 15 points on S&P cash, you gotta stay into that 5 minutes and that 15-minute time frame intraday price action on the linear scale. You have a log scale. A log scale is, I don't know, you can Google all this if you want. A log scale for bigger time frames like daily time frame, half day, weekly, monthly, and stuff. You view your price on log scale. So if you are a day trade, if you want to have if you want to become a day trader, and you says like, well, day trading is the way to go, is where I can make money quick as fast as I can. So you gotta have to go into a much smaller time frame, like 5 minute or 10 minutes or 15 minutes, is where you could catch a few points, So you could be a scalper, or you could be just to see if you can trade something for one day and see how the trade goes. So those are the ones that you just gotta be glued to the screen pretty much all like the minute you're gonna open the position, because now you're fighting your money on a 5 minute time frame and you just want to move as quick as you can. So a longer dated leaps and stuff. I mean, as you can know, like I've did what, Boeing, got plenty of time in there for this for next year. One, I, okay, so if you do a leap for 9 months from today, right? So what are you looking at? Leaps is gonna give you a 9 months of window, and then you're gonna have to have, what are you gonna have? Almost what, 2 quarters, okay? Most likely, depends where you're gonna, if you buy it here, you might have 3 quarters of earnings in between the 9 months of leap, or you're gonna have just only have two. So if you just go from now, from November to next November, it's going to be one full year. So you pretty much is going to have four earnings by that, by that leap. I don't normally hold leaves for that long. I mean, I would like, um, oh boy, I would hold shares because Leaps has the same thing. I mean, it has um where are the yeah. So Leaps has the same thing. You have a same time decay as well. Okay. So the time decay on Leaps is gonna be a lot less because you're going out almost 1 year out on time, but instead of paying the time up front for a shorter dated options, which are expiring in 2 weeks or 3 weeks or 1 month from now, you just pay more premiums, right? So the longer dated premiums is going to be more expensive. So, but it's going to have a lot less time decay. So you could pay $2,000 for one contract from a year from now is going to have almost like $5 worth of negative data per day, you know? So it could have $3 or $4. It depends on the stock. Depending the how the option what the option premiums looks like. So my job, or what I think what is right, is when you trade spreads, you eliminate a lot of that time decay out of the equation, you know? So instead of costing, like, the premiums are costing you $30 and $40, you can just, by just selling a call against the call that you purchased, it eliminates the time you could have a theta now down to like 11 or $12, you know? So the 11, because you're short one call against the long call. So short call that you have, it will decay fast because those premiums. So that's why the spread is the way to go. But the only downside for the spread is that if you get a massive move to the upside, your upside is capped, you know? I'll give you a perfect example on the trade that we just did on Snow, right? Remember the earnings that we just played? So my upside on the two contract that I did, what was this? What did I pay for this? Let me see what I paid. $1.60. Okay. I paid $1.60 for the Snow for 1 week out. So that 160 times two, it cost me $320. And I did this one like 5-10 minutes to close. So I did a spread of, I'm just trying to read earning lot 135 by 140, November 24th. Okay. So I was long 135 calls, slept by 140 call. So I was 135 long call and I was short 140 calls. And I paid $1.60, okay, for the premiums. So I had bought two that cost me $320. So for $320, my upside was capped at like 668 or something. And Snow exploded on earnings, right? And I only get to keep $650 because that's the only thing that you have on trading vertical spreads is your upside is capped. Now, if I would have a 300 or a $350 call option, that would have went 5 to 8 to 10 times at the open, you know, because you have upside is open on a single call play. So that's the downside of a vertical spread is that you limit your upside. And the same thing with covered calls and things like this. Like spreads, they cap your upside at a certain price because now you take an advantage of the time. But on the other side, you don't care much that time and you're so sure that the move will happen. And if that if the stock, I mean, snow went up like what, almost 40%, the next day after earnings. If you can catch a 40% move on a stock on a snow or any, like, depends on a premium or what, a stock went up 40%. I mean, those premiums are just gonna go nuts, you know? So you could, I don't know, $300 trade, you probably can turn into like 25 to $3,000 trade. It depends where um so I mean, like, I'm just giving an example, like $300 trade into a $3,000 trade. I mean, that's a hell of a trade, you know. So it happens, but you have to ask yourself this question: that how often does it happen? What are your odds? Very, very low, right? So you just gotta have to look at that way. It's not every trade is going to have your name on it. Okay. So there's gonna be a lot of trades that you're gonna miss out on. It's just the way the trading and everything works. You can't just throw money left and right because this is moving because I want to be a part of it. I want to get in. That's just FOMO trading, and those those ones, those traders don't last too long. You gotta limit your trading a bit. So let's look at this. Okay. What I was saying is, the point is, like, I don't know who has what size account, okay, but I just went through and I just told you, like, this is what I do. This side right there, I call 70/30 portfolio. Okay. This is 70% of your account, and this is 30% of your account. What I mean by that is you stay long 70% of the market, meaning the stocks that you're buying and the weakness and the good companies, and you hedge 30% against the long portfolio. Okay. So how do you manage this? How do I manage this based on $100,000 account is all of these trades, these are all, I'm pretty uh, good. Like, I trying to keep everything pretty clear and transparent, as you can see. I don't like mess. Um, as you can see right there, there all these trades here, they're like $5 to $10,000 range. And there's gonna be one that'll went a little bit more, like IBB right there, which I already closed it flat, was 11,000 because I gotta buy 85 shares. I could have gone 82 shares if I gotta have to keep it close to that 10. The point here is, like, I like to keep trades close as possible to $5 to $10,000 bracket. Okay. I don't want to exceed that $10,000 mark. I mean, there's going to be few bucks like J and J here, like 10,900, 9,001. That's fine. So this is all good. This one was 13. I did that one was because I got to buy it's expensive stock, 131. I went with 100 shares. So I paid $13,000 for it. I got like $988 out of it. It's a good move, but it happened pretty quick as well. So, like, that's fine. I'll make $1,000. I'm good. That because that was the target that I was looking for, and it just stock just started moving pretty quick. That's like so. some of these trades they moved pretty fast, and there's some of them that took a long time. Like this one right there is ZBR. I was bullish on this stock. That happens to be like $3,142 trade. I mean, well, this one had 10. I had more. It was an update the original shares. This was the last 10 that I closed. So I closed a bunch of these positions here. I closed this one. IBB closed it. WST. I just cut them. I just got rid of it. Match didn't really play it out. Um, uh, I didn't update this one. Globe. I gotta put this one here. Thought I had. So this one was good. I'm gonna buy this stock again, but it's just on a weekly, and the swings account is pretty high on those. So I'm watching now, and I'm gonna go back in this trade again for next year. I like this company, and it has potential. I think it's gonna run. Um, so these are all trades that I closed. Okay, so the point is that 70% of the of that 100,000 that I'm talking about is that's where I keep these trades into that $5,000 to $10,000 bracket. Okay, so those are the shares. Now it's gonna have some leaps as well. Like I did this leap. Oh, this is the Boeing leap is open right now. So like this was a Google leap right there. So I bought like only one contract, 160 calls. I paid 1,355. I went way out, and this Google started moving, made like $605. So if you look at this, that how many losses that I have taken all year long? Not that many, right? It's just been a pretty good picks. Most of my picks were pretty good. Most of these trades did play it out. So, and I'm not looking for every trade to kind of like goes three, four, $5,000 from me. I mean, because there's going to be some trades that can move pretty fast. There's going to be some that kind of go sideways and is not going to have that big of a return and things like this. But so you gotta just every trade is different. You cannot say like, well, I just want to cash out every single trade big or otherwise I'm just gonna keep holding onto it. No, I mean, you gotta make some adjustments, and you gotta sell some here to free up some cash, and then you can just buy something else, right? You can't just open 10 positions and like, yeah, I'm not selling or doing anything for the next year. Oh, well, that's not the right approach, because every 10 of those positions are not gonna go your way. First of all, I mean, some of them is gonna come and bite you, and you just gotta have to see like, hey, if I would take 10% or 15% return on my money, am I good with it? If depends how the chart looks, how the wave count looks, and where we have the resistance, where we're gonna might have a correction that might come into a play. So it is smart to take profits there, while you just gonna, or you just say like, okay, well, I went up this much, now I'm willing to give back because it hit the wall, and I'm gonna have to, suffer the correction. So that happens, well, if you are a patience trader and who's willing to uh, to wait around for a very long time, that's a different thing. Now, if you want to grow and think like, well, I just wanted to see like if I take my trading to year, or like there's certain trades that you carry over to the next year, you can do it as well. So you gotta have to watch what you have open, and you just gotta have to manage. Opening position is not a problem. It's not a rocket science. My 10-year-old can do it. It's the main challenge is the risk, that when you have the managing part is the most difficult part. It's just that's where you gotta have to make your decisions. Where to cut it, where to cut half the size, if the position is running, because I know this position right there, this zebra. I don't have this is not the, this is the last 10 that I held. Okay. This was a partial trade that I did. I mean, it's a pretty nice trade for me, you know. And I did this 100,000, sorry, the um I have 1,000 shares on my other client's account as well. And I was bullish on this stock, Zebra, from right from to where we start the year. I've been talking about this stock for a long time. Um, it's done really well. Um, Here I don't have the hundred and $50,000, $250,000 trade. But it, it was good. And then the other one was this GLW, was a really good one. This one has a very strong AI name that the data center. I was very um bullish on this name. I was like, you know what? Because this when this AI boom starting to trend, this year, and well, of course, Nvidia was moving, all the other stocks and stuff, and I was sitting and like I was reading about, and I come across this company, this GLW, and I started looking at the chart, and I was like, the swing looks good. And with all this, the data center and stuff, I was like, this is a cheap way to play AI name, you know? And that's why I was like, and then a couple guys on the CNBC start talking about GLW, like Josh Brown and those guys. And I paid I opened this position on January 5th, right when we start the year, about 100 shares of 33.27. It cost me 3,327. I would have probably like should have done 150 or 200. Anyways, so it cost me 3,327. I sold it for 50.39. So I made $1,712 on this trade, and I sold it here in November 10th. So from January 5th until November 10th. I mean, it's a beautiful return, right? For a $3,327 worth of investment. Huge. So I've, like, so the 70% that I'm talking about is what I do is to keep this side into the five to $10,000 range. Now you come to this side, which is this 30%, which is your option to call as a gambling account, is what I call it, is I keep my trades into this 1,500 to $2,000. Okay. I try my best not to exceed and pay more than $2,000 worth of premiums. Okay. Um, when it comes to earnings, okay, earnings, I will try to keep them around like 150 to $300 mark. That's it. I'm good with this. I'm comfortable on this account right there. Okay. So 150 to 300 for earnings. Option trades are 1,500 to 2,000. I prefer spreads. Okay. So that is what I do. So these results that you see here for this year is based on this. That's a return right there. The ROI is near almost 76%. That's huge. Okay. And every single one of these trades that you see here, okay, that I've given clear entry and exits. Like I normally, when you can see how I put out a trade, and I will literally shows you this is exactly what the snapshot, what the payout is on a trade. And I do it every time. I mean, I don't have any, I mean, I have one down month. So, I mean, I don't know if it's a down month or you just call it flat. And May was very choppy for me as well. Couldn't really pull anything. Plus, I took a loss on this AMD as well. And those two trade cost me here. Um, and then I picked it up. July had a monster month. Was one of my best month, July. Here on this account and my account, I mean, July was just, I killed this month. Really good. You're gonna pull one or two really good months with me. I'll tell you that. I mean, I don't know which ones, but when I go back and when we finish the year and I have my old sheets as well, because I kind of when we start a new month, I always gonna go back a year or two, look at like how January was for me last year, how February, it kind of gives me like something like, okay, whatever. Yeah, it was a good month for me. So it kind of having a little bit of a hope that I might turn into the same month or might do better, you know? So because a lot of time that your previous month's performance, it will, because remember, market is fractal, right? Because the market has repeating patterns. So if you're looking at certain months that if last year you had July was one of the best month for you. So if market can come like next year July, I could have a good hope as well and think like yeah, I mean I might have another good month because last year was pretty good for me as well. So I do look at that way as well, just to kind of look at the performance. So this is what I do. Okay. Well, I'm not saying that the next year is going to be another 75%. Well, market has been extremely bullish. Yeah, so a lot of trades will reward you, but the rest are just, you just got to take it day by day. Now, if you have $50,000 account and a $50,000 account, and I understand you cannot just buy um 4 or 5 positions, your an account is going to be completely full, like capped. So you're gonna have to focus on leaps and stuff like option leaps. So for those ones, now I'll just give you the example here. Shopify, right? If I buy 75 shares, so I'm long 75 shares, I pay 7,927 for it, and I paid 105.7 price. Okay. So if you wants to buy a leap and if you don't have $8,000 to invest, okay, you're gonna have to go out until like next September or so. So you gotta buy some time because you're buying leap. Now you instead of because you says like, well, I have a $50,000 account and I cannot spend $8,000 by holding shares. Okay. So either you could just buy a one leap of 75 delta, okay, or that your 75 delta on Shopify leap can cost you, let's say, 2 grand, right? So if you have a $50,000 account, you can manage a $2,000 leap. Okay, that's not bad. So you can do that. If you wanted to bring down a little bit less delta, you can do 60 delta trade, right? But you try to stay close to where I have my shares. But the only edge that you have is that you have times 100 for 1 point move. Okay. So, so you have to look at this way as well. Now, if this one like UPS is 50, the 50, it cost me $6,722, right? So the 50, you could do the same thing. You can do 50 delta. You can just buy one leap, 50 delta. Then now you have 50 delta trade. So it's the same thing. So what my point is like you need to because you want to make money on a move on the way up, but you want to have at least a decent size of delta in your favor. You don't want to carry a 20 delta and go out a year from now. I mean, a stock can move 10 points. I mean, were you happy making $100 because you bought 9 months worth of time? Or would you rather have 50 delta to catch 10-point move? I mean, times 100, I mean, that's $500. So that adds fast with that. Yeah, if you have, uh, so you have a little bit more risk, but you're gonna have a bit of a more leverage, and you're gonna have much better odds if the price starting to move in your favor, and you're gonna make more money. So that's how you are going to work with your leaps and stuff. If you don't have 70, like, like if you are like into that 40, $50,000 account, because you have to look at this way that if you have a, that's how I look at it. I have $100,000 account, right? If I'm risking 2% of this, that's $2,000, right? So that's $100,000 account. A 2% of this is 2 grand. If it's a $2,000, it's one position that I have on this account. So if I do that, so I have $98,000 sitting in my account. Okay, so you had $98,000 sitting in your account. What are they doing? Nothing. So you think that keeping cash in this inflation is going to help you? You have to deploy cash in some different ways around wherever you can. So what are you doing with this 98,000? Okay, so you go back, say like, okay, you will go and say like, okay, this is one position, I'll open another one. Or you can just make it like, say like another two. Now you have two positions open on this side, okay, which you with a $4,000 worth of risk. So then what are you doing with that $96,000 that you have sitting in your account? Because it just looks good? Or you just want to say like, yeah, I just have this money sitting. Doing what? You're just going to sit there. So this is why I don't mind at all. Like I can have $85,000 worth of risk on the board. I'm totally fine with it because I'm in shares and few of these. I didn't did any leaps this year, as you can see. I did one leap here, IWM 503. I did leap this leap here, Tesla 600. This leap IWM, another one, 2046. Okay. And then I did Globe Leap right there, 1210. Didn't pay me anything on the shares, but I made money on the leap. It's the same stock. Here I bought shares of $5,000 and I swung a lease 160 calls here. Only one contract on a 1210. Test Accenture right there, 890. This is the leap. There's the McDonald. What is it? This one was these two. This was the Accenture 890. I remember McDonald was small, 270, 150. These are two leaps. Um, and three of these. I did Hughes, 2017. This leap, IWM, and others. Yeah, as you can see how many leaps that I've been doing on IWM over and over again this year. 837 on this one. And then in this one, another leap right there, 503 on IWM. This is a leap spread cost me this because this is the hit that I took on earnings. That's the only one It won for 1,500. Now you gotta have to look at this way that every time when I put out a trade, or as you can see, it says I'm buying 75 shares at the market. Last price is X, right? For the stock portfolio. I tell you exactly how many that I'm buying. When it comes to here, I don't tell nobody how many contracts that I am buying. Okay. The reason why I'm not doing this is because the guys who are have, I don't know, a 25 or a $30,000 account, you're not sitting on a $30,000 account and risking $2,000 in a trade. If you have a $30,000 account and if you're risking $2,000 for a trade, you're an idiot. That's a lot of risk. If you open another position for four, five, six, if you have $30,000 account and if you have three positions and you're in for $7,000 all together in premium, I mean, I wish you the best. I hope you're right. You can make something out of it. And if you're gonna be happen to lose and take a hit, you're gonna be down big. Because don't think that I'm gonna be right, I'm gonna be right every single time. I'm not, I will not. I can be wrong on the next three trades. I'm just gonna be totally open with you. I can be wrong next 3, 4 days. The 3 to 4 trades. Would you be able to handle a loss? Are you gonna just pissed off and say like, what, screw him. I don't want to be here. That's what most people have, those emotional things that triggers in their head, which is fine. But I know for myself, and I'm that confidence, okay, and I have that experience that I will outperform the market every year. I'll handle a down month, a down week, but I will do my best to minimize my loss as small as possible in the end. I'll grow. I mean, I am not worried about that at all. I have technical skills that I learned over the years, and I'm good what I do, and I've seen a thing or two, and I can teach you something as well. So I have no worries when it comes to trading or investing. And I know that I'm gonna take few hits here and there. I'm okay with that. But I'm not risking something crazy, and and I'm not over trading as you can see. And we'll just try to grow. So so it doesn't matter what money that you have, but it doesn't mean that you have to be fully capped on your account, because you always gotta have to have some cash in case that you can buy something else that come across. So that's how I do it. I manage over $7 million for clients every single day. And I do the same thing on their account. This is what I learned over the years, is that if you have the cash, how to grow your cash over time, I think is the right way to do it that way. I mean, you might have a different approach. I'm totally fine with that, but it works for me. And for a very long time, it hasn't failed me, like it's not like if I'm keeping a 70-30 portfolio, you know, it didn't really disappointed me for any year. I think it's an excellent way to to grow your account, is to because this side you can play both ways, right? You can play up as calls and you can play down. This side right there is mostly up. So your option side here has hedging. And plus these trades here, there are shorter durations, is going to have quicker payouts. These ones will take a bit more time. But if you are not in any positions here, and if market moves, your position is going to go up. So you're always invested. Either depends which side. You might say like, okay, I'm taking a week off. I got a boatload of work um, come recently, and I don't have enough time to trade. Then you have this side working for you. You can be out on a vacation. Okay. You don't want to say like, oh, I'm going to take a few days off and stuff. You have money that is working for you. But then when you come back, and if this number is starting to decrease, you have this side working for you. You see, you just gotta have to balance it. Options has the leverage. It just is going to give you that edge that you can either buy calls or you can just buy puts. So you can do those on that side. That's why it's good to have an option account. There's some new guys that are coming in right now. They're mostly focused on building a long-term portfolio. Everybody wants to talk about a long portfolio, but those ones are gonna be really good for you if you are into those Mag 7 stocks. Okay. And you just gotta have to keep buying 10-15% dips on those stocks. And that will average you out over time. If you are going to go with some different companies like these Globes and this Etsy and um this is like KDP and stuff like this one. What was this? Yeah, like this one, Dr. Pepper one. I was bullish on this stock, really good. That was stock moved really fast. I remember that. Um, like if you are into these kind of a names and like you says like, well, I wanted to stay invested and this and that. I mean, there are certain companies that you can, if the chart looks good and you happen to catch a move, I mean, just keep moving, free up some cash, you made money, good, find something else, and there where you can deploy cash. Um, your main focus should be on big names. Okay, big names like the top 20 bigger market cap companies in the world. Those are the steady stocks. They have a good returns over the years. They have an excellent track history, performance, fundamental, things like this. So you got to go with the bigger market cap companies. I have, there's going to be a carry over and stuff. But again, as you can see, a lot of stuff is all yellow. This is all closed. So I'm done with that. Okay, it's done. Year is almost about to end. So I sold a bunch of stuff, free up some cash, and now I'm gonna try to build for next year. Okay, I got BA, Boeing for next year. It's a long dated spread that I did. Shopify, UPS, Apple that I'm gonna hold. I'm not gonna do Apple. This one is up 3,805. IWM small caps. I'm just 2786. I got 50 shares. Bought them back in March. Yeah, back in March 8th. This year was 15. March 8th, 2023, 50 shares. I paid 183.37 for it. 9,168 was the total cost. It's up like 2,786 bucks. Every single one of these trades that you see here, option side and this side, it's on signal alert. Every single one of them. I alerted those trades. Obana taking a beating. I'm waiting. If I can get a mean reversion, I'm going to pick up a leap on this one. Same thing with Estee Lauder. This one I'm taking a beating. This is a China play. This freaking stock just got killed this year as well. So took a massive, massive hit. Target was really good. I had a pretty good hope on a target. I was up 350 bucks or so. I have 50 shares at 151. And I was like, I even sent out a tweet as well. Let me show you that trade. I even sent out a tweet as well. I was like, okay, I hope that thing goes. And I know it gonna have earning risk. And this is the play that I was looking for. And that was this shoulder, head, and this shoulder. And here's your neckline. And this one has that trend line that was coming down here. And I was like, okay, I have a pretty good odds, or I can hope for the thing can break out like this. And then I throw a VWAP here. The VWAP was right there, this pink line. And then the 200-day moving average, which is this red line right there, was right there. So I saw a close here, and I was like, I'm in this trade. I was in this trade for the all pretty much for this time right there. So I've been watching all this week that how what the price is doing. Price is just literally bouncing between this VWAP, as you can see right there. You see it's holding this VWAP. I mean, the 200, I was like, it's just circling around here. But at the same time, when I look at Walmart, it just keep ripping every single day. Walmart is up like 60 something percent year to date. Do you know that? Like 68% year to date, Walmart. And here comes earnings. Like, oh my God. I looked at them and stock is down 12% year to date right now. And look at the spike in the volume right there. Massive. This is the biggest volume day for Target on that dip compared to this one. And then, oh, this is 2024 here anyways. Starts from here to here, right there in the bottom. So this is all 2020. So Target had a pretty good run. It just hit the wall right there because of the trend line resistance right there. And then over the months, it backed off and it just kind of stayed sideways for a very long time. And if you look at the time here, right here on the bottom, from this is you're talking August, from August all the way here until November, it just literally stays sideways. And so I had a pretty good hope that when Walmart reported earnings, I thought like Target will do well because of the holiday season, things like this they're coming, but they just came up with a big surprise. So instead of breaking to the upside, it went down. So I was wrong. So I understand that I was is gonna have earning risk, but now where we at? I mean, the stock is definitely bearish. Okay, we can see it. Um, it's below 200. It's below the VWAP as well. The price is sitting right there. What I was watching this week is this 119.82 print. Okay, by taking this low to this high is to see this is your 78.6 fib. So 78.6 fib is a pretty strong fib. Okay. Um, so I'm hoping now is at 125. I'm hoping that Target can just buy some time until next quarter because they lowered their guidance as well. So I understand that holiday season is coming. That holiday season, which is coming right now with the Black Friday, Thanksgiving, Christmas, and all the shopping and stuff, is will be reflected in the next quarter, right? So you gotta have to pay attention to these things. So um, Amazon and Macy's and Walmart and Target and all these stores, that you see that all the business that they will do in this holiday season that they will report into their next quarter. But they're lowering their guidance for next quarter. So that is not a good sign. a quarter before target has raised their guidance for the next quarter. Wow, I mean, I don't know what the hell they're doing. I mean, it just really doesn't make any sense. A last quarter, you raise guidance. This quarter, you missed your earnings, and then you lower your guidance. So one quarter you're raising, and the next quarter you're you're putting the guidance down. This is kind of a little tricky. Fundamentals are not really. This is why the is just confused. So I'm gonna give some time. I don't have to down $1,000 is not a big deal. I can live with it. Um, I don't want to add anything. Like I could buy 20 more shares or 30 more, but I'm not a very big fan of adding risk. If something doesn't work out to my plan, I'll just either wait for a little bit longer and I will see if I could pick a option leap or something, just try to see if I can hedge something. So if I'm down 1,000 or 1,100 bucks, if I can pick a leap and that could pay me 400 bucks, let's say, I can bring that thing down to like 600. 600 is better than 1,100, right? So there's I don't shares, so I'm okay with that. I mean, for now, and I'll see. I'll keep an eye on it, and it's down 12%. I mean, the the swing is down. I get that. It's below 200 and the VWAP and stuff. If it's gonna be for next couple weeks, few months, if it managed to crawl and kind of hold this zone, I mean, it could make its way out. So, I mean, it's a big name. Target is a big name, so I don't think the stock is going to 50 bucks. I mean, it can, but but I think it should hold. It just needs to hold some support here. That's all. I know the ceiling. I'm well aware of that. I'm not worried about the top side there. I know what needs to crack in order for stock to move higher. You need to find a floor. Where the selling pressure, when it comes, it just has to take a bit of a, like it has to pause it. Like like put a low here, can bounce a little bit, come back down to kind of retest the low one more time, just to make sure the bottom is in. What I mean by that is like this side, you see right there? This week was down, next week was up, then come back down, then you came back down. You see right there? This is how you make a floor on a price, right there. And then from there, the price moves. A one spike down never initiate a low. It's going to get retested one more time. Okay. It's the same thing here on a breakout as well. When you break the resistance, you make room to the upside. So that's your breakout. Fine. So that was your high. Price went down, came all the way back up, and then you break from here. So when you get this breakout, sooner or later, that breakout has to come back and retest it. Okay. And then from after retesting this thing, you want to make sure that you don't want to close down here like this. You want to stay as close as possible because this resistance where you had before is just because where you take the biggest plunge to the downside, it's going to act as a resistance, right? So when you're going to break this resistance, when you're going to come back down, that will act as a support. A broken resistance acts as a support to the downside. So they're always the breakouts, these kind of, they call the retest. And then from here, a price can make a move higher. So when you have a breakout like this, and then you go like this is a false break. So you gotta be very careful with these cute breakouts that you watch every single day. The good way to get a breakout clear read is on a 1 hour time frame. 1 hour time frame when you're gonna have 1 hour bar, second bar, third bar, so 3 hours, right? 4 hours, five. So you have a little bit of a room to the upside. You can spend like 3, 4 days, you know. So it's a 6.5 hour session. So 6.5 hour, another 6.5, another six. So you have 3 days. So 2 days or three. So if the price comes back down and retest it, it's okay, you know. So and then from there it goes right back up. So you gotta watch those breakouts. Okay, so this is all good, right? I hope you all understand how you should manage and try to grow your account and and see like keep keep moving and we can find good trades and we'll see we can make out a good year next year as well and let's keep pushing because I'm going to close this sheet at the end of the year. Whatever that I have carry over, I'm going to start a new blank sheet, okay, from scratch. This is going to be all, I don't have nothing here. It's going to be all, everything will be closed on this side, whatever that I am holding or whatever, these are the new ones that I have. But got one more to go for December and we're done. And then I'm focused more here. Um, I'm, I'm just want to try to go with the different sectors, to see if we can pick something in healthcare. I have Apple here, which I'm gonna be fine. Small caps, I'm good. This is industrial information technology here. BAs and the industrial here. So I'm looking several, see if we can pick something in energy, some utility or something. Like I'm working on a bunch of things, so it's gonna take some time. Be patient. Um, what I gotta do. What I was gonna show you. Well, week we just went sideways, so there's not that much there to do. Here's SMH. This is the main driver, right? So we all know. So what do I have here and what we can expect going forward? So here's the here's the low, October low of 2022. That's where we had our bear market. And from the bear market, what I see here is is a one, two, three, four. Okay. And what I can make a case out of it, or what I think, I mean, based on technicals, how I see, it has one more push to go to complete a fifth wave. Again, this is a daily time frame. Okay. So one bar is for 1 day. So you're looking at a very long time horizon. So if this is one, this is three, because this three right there is a little over 100%, which is fine. I can't put a three here. It's gonna make it much smaller compared, like, meaning like one, two, three, four, and five. No, it's just not right. So keeping a three here up on the top, what are we looking here? What I'm battling with, or whatever you want to say it, Semis are literally not doing anything. So here's a July high for SMH. The leader is NVIDIA, remember? And you got all the other names are in there as well. So friends, July 11, semis was down 29.17%. That's a pretty big decline, as you can see. 30%, that's huge. And is this some sort of a fourth wave? That's what it is. It's right near this 50%. That's when it came. It didn't really hit the mark, was a little shy, like few points. So the fourth wave retracement was near the 50%. So I can count a clear diagonal in one from here, keeping this low here as is, and this decline here as an ABC move down into the second wave. And remember the rule of the diagonal I told you, right? Their diagonals normally comes back down to minimum your fourth wave. So this low right there is exactly right there. See this low right there and this low. It's 237. So the low here was 237.39. Talking pennies. So, and then from here, since we went this low, we put this low in. So for 1, 2, 3, 4. So this week, semis for the last 4 days is trying to see if it can, what I'm watching, okay, is this yellow zone is where I have this yellow bar, this yellow zone here. That's what I'm watching. Remember, we have three colors on our chart. Yellow is the caution, basically is where we look for our entries. Green is where we have our targets. And red boxes that you see, which I don't really put that often because I'm not that really good at picking tiles, but they do come sometime handy. The red ones are the ones that when I come across, when I have a wave count, is going to have a huge cluster of fib resistance on a multiple waves that comes starting to stack all together. That's what I'll put the red box. That red box is going to have a very, very good chance that price is going to back off. Um, so that was the three colors that we use. So you're going to remember those. So if this is a three, if this is a 5, this is a 3. So for next year, semi should try to make his way back up toward the fifth wave. Now the problem with the semis right now is this 262.93 mark, which is this 78.6 retracement. It failed twice. So it had a decline, managed to went back up. I had them as a diagonal to hit the 78.6, rejected. Made another attempt, rejected again. But this is the door to the upside. I know that for a fact. You break 78.6, you're going to take out this high toward your 127 extension and then 161. That goes on and on. You need to crack this. So we failed twice. Now we're sitting at 244. This is why none of these semis are moving. If you have SMH is going sideways, these semis are just not going to move much either, right? They have to, these big names, when NVIDIA can only do much, but if the where you don't see. Give me a second. Hang on for a second. Hang on for a second. This is it's a new guy signed up last night, and he was a previous um, customer here who happens to leave, and now he's coming back. Now he only has these all the system don't allow to rejoin with the same email. I have to activate the account because it will make duplicate um, profiles. So I'm just trying to help him. I was like, just let me see, I can send you another invite. So yeah, give me 1 second. I will then we'll finish up. Uh, it's always like this. I mean, I don't have anything against to say whatever. I mean, people decide to leave and they're just gonna come back. I don't know. Just some guys are just make too emotional decisions. And just email him and that's it. Okay. So this is what I was this is what the semis are. So the point is like if semis can take another leg lower, it's possible. But the point is like this is not bearish at all. Okay. This price right there, which is has a rallied that much to the upside, is just in a distribution phase and it's just going kind of sideways, you know? I mean, I don't the only resistance that we need to watch is the 78.6, as I just said before. That's where we had two rejections before. And we just need to see where we could find some potential support here. But the point is like, can this C wave can extend further down? Yes, it can. What I'm talking about is like going all the way back here toward the prior second wave of this diagonal. It's the only way I can label and shape this thing. So what you're looking for this in this case, if that happens, so this is going to be A, that's your B, okay? Or it doesn't matter like how you label this. You could make A here and make this as a flat and a B, like they call the expanded flat. And then from here, either you can put A here or here. It doesn't really make a difference. So, but what I'm saying is like this is one, two, three, four, five. So this C wave will come all the way back down here. So that's a possibility as well. Okay. That's going to be the downside risk for semis if this C comes into a play against this five. Okay. And then from here, make our room back up. But the point is like, this is one. Other thing is this, it could be just a giant triangle, you know? That's the thing about this fourth wave. Fourth wave will torture the hell out of you. There's no way you're gonna tell how this fourth wave is gonna break. Like one is gonna be over. It's gonna be over when this thing's gonna break. And as we can see, it has failed twice. If it fails twice, it's gonna break. I will that will be my bet. Okay, because SMH is gonna has a lot of big names. It's gonna crack that thing. So it's just a matter of time. But the point is like is SMH is just staying sideways. What I am thinking is if Trump gets in, he's gonna throw tariffs. Semis are very call it like tariff sensitive. Okay. With especially with China and so if that happens, if well, I don't know his new policies and stuff. First, he has to take an oath, and then he has to get in the office, and we'll see what he's gonna do. If he's gonna go after semis, meaning with tariffs, he's planning to do. If tariffs comes under pressure, okay, I would. This is gonna be some sort of a decline down here. That's how I see it. This is daily chart, so keep that thing in mind. This is a long time. You're looking at here January, February, March. That's your 1 quarter for first quarter for the next year. So this can take time. 1, 2, 3 bars can. So from here we could kind of like make a case like, okay, if this is five, and then I can, as I said before, is to have a decline like this, meaning the semis comes under pressure and stuff. But if we are good to go from here, I'll take that all day. This bet is that we tested this and we're just slowly starting to make our way back up. So that's what I'm tracking right now on semis. Semis are very important, as you all know that. It's just to go toward this fifth wave. So from here, the if this low holds and we take out this high, then we need to take out this high right there. This is where you're gonna have a major resistance because this is where we have almost a 30% plunge to the downside. The 283, which is the all-time high for semis. And then from here, the equal measure move for minimum just to get to the upside will be 310. So I was thinking about buying a leap on SMH, to be honest. I have IWM, right? And I would I wouldn't buy um shares because shares gonna cost me a lot. It's a $244 ETF. I could either make like a diagonal spread, you know, for this for I'll structure one. And then worst case, if if it does decline to the downside, I can always add another one, you know? And it would just because this is some sort of fourth wave. If this just happened to be a triangle, fine. If it's gonna be, if this is all a four and we just have a 1, 2 and we're gonna go next year, I'll take that bet all day. But we're gonna be, I'm just watching this double rejection here and see if we can hold this yellow zone and see if we can make our way back up. So this is a very important chart for next year. This is what I want to do. I want to go over. I don't think I posted this on for you on Slack, but I was so like, okay, I'll talk about it on over the weekend. So that's semis. What else do I have open? Talk about S&P. Um, I'm just going to 1 hour managers. Some people just because this thing is gonna change so fast. I I I can tell you that. And I keep a 15 minutes and 30-minute charts pretty much to myself because the reason why being is because it has a lot of smaller time frame subdivisions and they're gonna they change fast because it's a much smaller time frame and I you can screw it up pretty fast. And smaller wave counts normally don't work. It doesn't have a very high rate of success because you can screw up a label, put one here or two here, something like this. It's just going to change all these ratios really fast. But on a bigger time frame, it just that is different because it's going to give you a much better read and you're going to have a lot more time and you can have a much better clear read to the price. And, doesn't have too much noise. Because you can say it that way. So I mean, we're what 0.79% from an all-time high. I mean, I hope we rip, but I don't think we have a lot of time left this year oops, because almost we're done with almost the year is almost over. So let's go back to a bigger time frame right there. Remember, I am doing the same thing. We just looked at semis, right? From from October lows, the this is where we had our bear market. So the daily time frame of an S&P is that 1, 2, 3, and I'm trying to see how I can make this thing run to the upside by either keeping a four here as a running flat, or I can move the four down here and to see if it can count our waves to the upside. So I have them both. Okay. I'm not either way. I mean, if I put a four here or either I put a four here, we're going to have 5 waves to the upside. Okay. Because we still need to complete a fifth wave. A fifth wave cannot be a 5-way move. So we need to, this is where we at. So I have four here, and then we have a diagonal here. Then we should look for if I do this from here, it has a very nice clean look. You have a clear 5 waves up, 3 down, 5 up, 3 down, and we should make our way back to the upside. It has a very nice subdivision going to the upside by keeping the 4 here on the but this count that I have here, instead of labeling, putting what the heck was that here, I put it here to August low. So I have them both. I can count both ways. So that's not a problem for me. But as long as the price is making higher highs and higher lows, we're good. Okay. So this is not gonna change anytime soon, anyways. You need some hard, like weeks and weeks of selling, okay, in order to change a daily view count. And that I just don't see any signs for it yet because weekly swings are up, daily swings are up. I mean, I don't know. Well, there's no point to become a bearish. You have a price sitting less than 1% from an all-time high. Um, if we do this way, so let's focus on, so we know, you know, all this part. So let's just pull this up a little more. So what we can do now is this. You see a lot of like something it is better to show it to you. This way you will see instead of me posting this and then you'll be like, what the heck is going on here? You know, it's better for you to see it. When you see things, you will understand better and it will make a lot more sense in your head as well. So if we do this, okay, with the running flat, and if we go up in a 5, down in 2, up in 1, here's your the whatever the decline we just took down to 50%, which was 58, 54. This is where we put a double bottom, okay? And then from here, we should look for this third wave going to the upside, okay? So if this double bottom holds this low 56.96, what we look for another 100% to the upside is 61.82. So 61.82 would be the upside from here by taking this low to this high from the projected from this low, right? Now, if we take this swing right there, and then this two, 100% is right at the 6161.98 as well. So now you see that you have two of these are sitting right next to each other at the same time. When it had to have when you have these these called they call fib cluster, right? You have fibs that starting to stack together to the upside. So now this is very close against 3 versus 1 of this compared to 3 versus 1 of this. You see, you got a little bit of a gap here, right? But your minimum third has to get to 100 at least. Yeah, we don't want to keep it smaller. It's just not gonna work. Makes it very difficult to measure the upside. If you're gonna, I try to do it. I tried doing it, but like when I used to trade currencies, and that time I tried to left the third wave shorter on a purpose, just to kind of. I was not in a trade on those trades, but I was labeling that way is to test myself, is to see how does the Elliott will respond if I'll keep the third shorter. And I just did it on a couple currency pairs, like on Aussie and Kiwi dollar and stuff. And I left some room for the fourth wave to breathe by keeping the third smaller. There's no freaking way that you're gonna make the fifth wave work. This doesn't work. So difficult to get ratios, fib ratios of your 5 versus 1, and 5 versus 1 plus 1.4, because you're measuring, because the fifth wave has a relationship with 1. And when you have a smaller third wave and then you have a bit of a fourth and the wave, first your wave kind of gonna look weird. Second thing is this, it just makes it very hard to to see what the relationship was going to be for the fifth wave, because now you have a longer, because you have the biggest wave is your 1, second is smaller, third is smaller, fourth is smaller, and then you're looking for this fifth wave. How you got, how that thing is going to end. So this way, I mean, um this is the upside projection that we can run. um so this price action that you see here, right here, is on this 15-minute chart right there. So from this 15-minute chart right there, what I see here now is a rounding bottom, like this. Okay. So stuff here. So it's, again, this is a 50, it can change. So you have a beautiful round bottom. Here's your top. Now, where we put this double bottom here, we can count this. I can count this thing as a diagonal. It's a very steep fourth wave, which is okay. Again, this is a 15-minute chart, so you gotta fight your life. So I can do the best as I can just to see if I can get the price up from here. What I like about this is this, that here's your channel. It's got a little twisty now. God, I don't even know what I'm showing you this 15-minute chart, to be honest. Um, what I like about this is this. So we had our channel, right? That's the low, that's the low. So I put this projected up on the top. I'm moving. And I projected this to the top, right there to this B wave, right here to this one. And you just leave the line up on the top. What I like about this is that when we stayed in a channel on the way up, came back down. This is where we put a double bottom. Then we're starting to break this channel to the upside. When I started to see this breakout, I was like, okay, fine. And then we had another sell off, and this is where this back test comes into a play. You see right there? I don't know where exactly to match the little point right there, but this uh, sell off stopped right there at the channel support. So because that's your breakout, you came right back down to retest it. And then from there, you're trying to make a move back up. So we can count this as the same as a leading diagonal. Here's your three down to 61.8. And then from here, we're getting close to this 59.81 mark, which is going to be the same distance here, 2, 3. But you don't want to stop here because you're not going to have much room to breathe for this fourth wave. You know what I mean? You can't, what I mean by that, let's say you keep third here. So you're not going to have much room here left. You need to kind of move, you know, because you have to leave some room for this fourth wave to um and then From here, we just need to see if we can make the room back up. So where's my thing went? So the other thing what we can think is, what if we back off? So if we do that, I mean, then we could, if we back off, so then what we can do is just we just need to look for this handle to form then. So that would be the downside risk from here. If if we just, I mean, looking at the swings, which we just looked at here, we closed the week with an inside week. I mean, look, these prints here. I mean, this one has a little bit more room. I mean, it's just a matter of like next week for 4 days. Do we reverse? Well, if we do that, then this one has to come all the way back down to 430 as well for next week. You just need to push back to the downside for a lower bar. But these two have a lower bar for this week. These ones only had an inside week. You see how mixed the market is? So this one was made a new low, but it's managed to reverse right back up because your swings are up. So there's no point to be fighting the downside when you have a price that is moving higher in front of your face. But but if you just want to think if you are smart enough and who figure out the top, good. I mean, I wish you the best. I mean, I hope you're right. But just I don't see a top in the market. Nah, yeah, I don't see signs for it. I could be wrong. This could be the top, but I don't see any weakness to make a case to put a top here. So that's the difference. So I mean, again, we have 4 days next week. So I don't know what kind of a firework that we might get. We might again know nothing. But if we happen to back off, meaning that we're starting to go like this, then we can just form this kind of a handle here. And then from there, we can look for more upside. That's This is the 15-minute chart that I'm talking about. So that's the only thing I can think of right now. But looking at the swings, I look at more swings than I sit and fight these. Oh, I don't even mess around with this chart anyways. I just keep them just to kind of go through a session. But I already had my swings on the different fibs and stuff. I kind of know the prints, what could be we can expect to the upside and what would be the downside and stuff. This is all different part. Sorry, I was up late last night watching Formula One qualification down in Las Vegas. Um, so this 1 hour is fine. I mean, why can it so small? 1 hour is fine. See, this is had a much better read. So I mean, the point is like we need to complete 5 waves to the upside. It's just how I see it. It's just incomplete wave count. I mean, If we just do this, 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 and this, let's assume that this is the top right there that everybody's dying to pick. But your initial decline is a three-way move. If you think that this is the top, you need at least a five-way move to the downside, and then you need three swings to the upside to make an eight-way swing. This is a three, not a five. As a matter of fact, that I see some guys that even counting this thing as a five. People have no clue. How can you count this as a five? Somebody can show me that. Here you have a double top. So where are you gonna, how are you gonna count five here? It's a three-way move. Okay, so if this is a three, this is a three, that's a five. So how are you gonna make this an ABC a five-way move when you don't have no fourth wave to be seen? You see my point? You're forcing something that if it's just against the rules, but you're just trying to convince and telling everyone that I got the top in. If you're gonna do wrong, if you're gonna do something wrong, Elliot will stop you because Elliot has rules. You're gonna break the rule. What are you gonna make your own rules? This is the beauty about the Elliot. Elliot has rules. You're gonna break rules, it has consequences, right? In general, you go commit a crime, yeah, you go to jail. In this case right there, the way the principle has been written since the 1930s, okay, if you gonna count your waves right, if you're gonna go against your rules, the wave count will not work. But most people don't understand that part. They're just gonna force it. Forcing label your count, your wave count is not gonna go too far. First, it doesn't look right. Second, you have broken every single rule. So what are you trying to do? And you think that the wave count will work? I'm just sometimes. I mean, I don't nonsense that I see on Twitter. It just blows my mind, man. What people are doing every day. I'm just I don't say anything, but I'm if you don't know something, take a few days off, read a book, read the tutorial. And once you read that, memorize these rules and guidelines. Once you will do that, that is all practice over and over again, over and over again. You're gonna make wave counts after wave count, but you kind of need to know the content. You should know what the rules and guidelines are. What the guy who died, who wasted, who spent all his life by when none of these computer was even existed that time, back in 1930s when none of us were even born that time, who wrote this entire principle, the market behaves in a 13 different patterns. The only thing that guy did not cover was diagonals, leading diagonals and ending diagonals, and then the diagonals have the different variety, like expanding diagonal. Expanding diagonal has the volatility, volatility in there because it expands. That's the only thing that he didn't cover in his original book, and with all the work that he has done. all those diagonals, the is been it came because remember old times they're pen and a paper, right? There's no computers around. And then these them when everything gets electronics with the market and things like this over time, with the new technology and things like this in 1970s and 80s is when the Bob Proctor from International Elliott Wave International with Frost, these two guys started to observe like what kind of a pattern is that is starting to form from the bottom up and where how it ends. So with their research, because the market has a different behavior, right? So if you have a three-wave correction to the downside against your trend wave, now you need another five, right? Because this is what Elliott is. Elliott is fractal. So you have a five waves up, you have a three waves down. So what do you look for next? Five waves up. So what are you going to happen again? Three waves down, another five, another three. That's what the sequence goes. That's how the sequence will go. So then once you complete five, goes into a one higher degree. Then you take a correction. Then you take another five, makes one smaller degree, another degree, and then another. Then you complete five within that three. When the three completes, it goes into a four, into a five, that completes one higher degree. Then one higher degree takes a three-wave correction. The three-wave correction on a smaller time frame or a bigger time frame will be stay the same because he clearly says that after every trend wave, there's going to be a counter trend that moves against the trend. So now if you want to talk about a simple logic into a swing kind of swing counts, simply take one swing up, second swing down, you have a high here, that's your higher low. So what are you looking for here? Is you looking for a retracement here to see if you can make another higher high. That's how the bull trend resumes. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. On downside, lower highs, lower lows, lower highs, lower lows. You just keep going like this. I mean, it's just, but there's some people will, I'm not saying that the entire world is wrong, but just my eyes hurt just looking at that stuff. Basically, take a pause, take a good look at your chart. Because if your chart is wrong, it's going to cost you money. I can guarantee you that. So you got to be careful what you're doing, right? Because so what are you trying to do? Man, this guy is giving me a headache now. So, um, so from here, that's the move to see if we could get get to the upside in the next, I don't know, whatever days. So 59.81, all-time high 6,000, 3 versus 1, 6,041. And that's the 200 relationship to the upside. So you're gonna break this, you're gonna try to make some room to the upside. It's just the same thing as just talked about. Take out the high here, you try to get a breakout, retest it, get one more push back up in five is to complete five smaller waves. Then we just go from there. So it's been this entire price action here is what you're Yeah, this is a, I don't know where we started the week here. This. Yeah, this is inside week. Oh man, we went all the way back here. So from here, you can actually fit the entire week into a 15-minute chart as well. That's the low for the week right there. And this is the high. So this is the 5 days of price action. Day one, day two, day three, day four, and day five. So that's your 5 days right there, and for one day, for 1 week. Well, again, as I said before, is either this or the handle. So we'll watch that. What else? IWM, I did kind of change this count a little bit. I'm still looking to the upside. And oh, I gotta take this off. And crazy, but there's no other way you can make this. It's all 3-3-3 moves. You can make this thing actually a little bit smaller by putting a 4 here instead of triangle does make the most sense here anyways because it's just so much sideways consolidation. And just get your fifth wave up. So 1, 2, up in 3, which is near the 261.8. So the ratios work really good. I mean, time is just way too much. This is the daily time frame. 23.6, you got A, you got up in B, down in C, D, E, and then from there you got the breakout. So you got your 5 waves here from the low right there. And then from here, I have an expanded flat down in 2. And then from here, we're looking at 1, 2, oops, 1, 2, 3, 4, fifth as an overshoot. That's the only way you can, I mean, I could kind of play around. Um, just do, I think, I think this is gonna be fine. I mean, either this goes out, it needs to make a new high, first of all. This is crazy. I mean, it's close. It was super close here. And now it's trying to make another attempt here. So we need a strong push on small caps to see if we can make some room back to the upside. Because if it doesn't do anything, I mean, we just looked at those weekly bars. I mean, we're good. Worst case, we held this zone, which is a good sign. Kind of looks still, I don't know, might change a little bit because I gotta. If this is a 1 here, see, I can try to play it out a little bit to see if I can change this. If I put a 1, 2 here like this, that could work. We can make that one work as well. So you just do 1, 2, 1, 2, and then you can just do it like this. So you make this as a diagonal, right? Change the color to green. So you change this one into a diagonal. So this is your 2, which is your 2 versus 1. So whatever, this again is a double bottom. One few pennies point doesn't really make a difference. You can subdivide this into a WXY. You got, so you got this. Here's your bull wedge. And now from here, you can do this. So this is a way to go as well. So we can do this way. So put this one a little bit here. You can see, I gotta change these colors, keep forgetting about it. So if we do this, so here's your second wave, came right back to 61.8. So you got one, two, and then you look for three versus one, which is right there. Okay, there you go. So we can do this as well. And then just try to complete five blues. Got five up in green one. You got three down. Got five up in blue one. Three down in two. Now we're gonna have to find these brown three to complete this third wave. Then get a fourth, and then get the fifth to complete this third wave. So your third wave right there out to the upside, your minimum upside is 275. So now you have 275, you have 127 sitting here along with 3.1. So there's your zone right there to the upside coming into a play. It's starting to stack together. So still got plenty of room. You're talking 12% on a 12.5% of an upside. Semis are up like almost what 20% now. I mean, it can happen. Got time. If the breakout, which semis are trying to press toward those highs, if that breakout happens, I mean, we could accelerate to 251 and 269. So it'll be nice. I mean, oh, I'm at 183.39 for this year since March. So, God, I gotta stop my hand here. Yeah. It's a 30% upside on a ETF. It's great. you know, I'll just keep the IWM. You just basically own all the small caps all in one basket. So don't need to do anything to it. But the Apple and IWM, and I'm thinking about SMH. So let me I gotta do a little bit more work. Gotta check a few things and see I can buy something for next year. Just leave it, and I know it's gonna be a punishment with the fourth wave. I would be much better off going with the shares, but at the same time, the share is just gonna what's that SMH 244, only 50 shares gonna cost me $12,000. I mean, I can do it, it's not a problem, but 50, I play 75, 100 delta plays. If you, I don't know if you, some of you noticed that or some of you probably don't. The point is like, what I mean by that is I like to buy like 75 to 100 shares, right, on stocks. And then when I try to play options, I try to keep my delta around 75, kind of 50 to 75. Okay. 50 to 75 is the max delta that I keep on the option portfolio, on the option trades. Okay. And then 75 close to 100 I do on the stock side. So because you can catch a 10-point move on Tesla, 50 delta is $500, so 50, 75 option trade delta is good. Try to keep them down. And 35%, 35 delta is the further I go out. I don't go any less than 35. 35 delta is it's a good, it has a good probability for a 35%, 35 delta and a 35% probability to be in the money. It's a good, it's a good probability. That's how I see it. I don't look at delta or 25 delta. I mean, come on. You have a 20% chance for that strike to be in the money. 35 sounds much better than 20. So, semis are okay. Well, we're gonna see if we can get some room to the upside. SMH, couple star here, MSTR. This has become a poster child now. Um, you have, this is good. It's a pretty clean wave count. If we go with one, two, within this three, we have 1, 2, 3, 4, 5, and we hit the ceiling here right there, 545, 543, near this 554. And I was really hoping that thing was gonna poke right there to that 3 versus 1. The 3 versus 1 is at 569, you know, but it just it went a little bit shorter. It's okay. I mean, compared to this one, because your 100% is right there at 371, which was right there. So you have this whole thing is actually starting from here. So you're looking at 1, 2, 3, 4. This is the post triangle thrust to the upside. And that will complete with one. Okay, just remember that. Because triangles only forms in a fourth wave. Just remember that for sure. It doesn't form anywhere else. Only forms in a fourth wave. It never forms in a wave two. So when you have a contracting triangle in a wave four, what you're looking for is a post triangle thrust to the upside. The post triangle thrust to the upside is going to be your final move to complete one higher degree. And then from here, you look for a three-wave correction to the downside. Now, this is the daily time frame, so it's going to take time to complete the whole run. Now, the reason why this thing is ripping to the upside is because the wave one is a leading diagonal. Remember, I tell you this thing every single week, and you seeing this thing every single week in front of right in front of your eyes. That what happens when you have wave one like this, and then what you can expect in a wave five. I hope you remember sessions, what we go through every single week. Okay? Is which the same thing that you're saying here. I know how Elliott works. I've been doing this thing for a very long time. I don't do as much, to be honest. I just don't do it. I don't spend near close to any time how I used to do. I'm just too busy doing other things. I've seen this thing thousands of times, from currency market to all the stocks that I've traded all the last, all these years. This is nothing new for me. I can show you thousands and thousands of stocks, which wave has which relationship and which one will most likely will end there. So this is the practice and time if you're willing to put for the next several years, yeah, you will get the same results. by watching and listening is one thing. Yes, you're gaining knowledge and you getting starting to get an idea, but at the same time, you gotta put the work. You gotta know how to count. If if you put this three here, it's just gonna change everything. That's the tricky part, you know? Because as soon as you're gonna move these labels, you look, see how everything is moving? When everything is gonna move here, it's gonna move to the upside as well when you're gonna project. So you gotta know where you're putting these labels. That's the most important part. So if you're gonna screw up here, what do you think is gonna happen? It's gonna cost you money. So once it's gonna cost you money, then what? There's no refund in this business. You made a mistake, you're gonna pay the price. So if you're not comfortable or gets a little bit more confused the way to start the count, how to count and things, that's fine. Then just leave it on me. I'll make it one for you. You don't have to to do something on your own if you don't have enough experience, have enough knowledge, and then you're putting money into the on the line, hoping the thing is gonna play out in your favor. You just like just like a big hope. The money will you get that the trade will play out for you. So I mean you could be right, counting everything right from the start. But if you didn't do it right, and then yeah, so you got one, two, that's fine. So for now, what we will look for this name, a lot of noise right now, as always, is to see if this fourth wave takes a little bit more of a breathing room, like just to kind of consolidate here into this yellow zone. Now, if this fourth wave starting to retrace more on time and price, and if it's starting to close below this 333, remember this number 333. Why is this support is important? Is because when this stock managed to yeah, managed to clear this upside, back tested it, which is really good. Fight it here for hours. Okay, right to this 333 mark. I mean, it dipped below a little bit here. You're talking like 10, 15 points. And then from there, it made the move back to the upside. So the reason why this thing is important is because, oops, back up in here. This 333 number goes here to your 2000 highs. This 333 number is very important. Okay. So you can put a price alert on your chart at that support. It's a very major support. Because when this is where you're talking 99.87% decline, 100%. You log in from 333 down to 0.42. Okay. So that it took years and years. Look how much years time frame is that. This thing has room to run. This story is not hasn't even ended yet. It has some crazy run, but it's gonna take a very long time. I can tell you that. Here is your wave one, down two, up in three, down 4, overshoot in 5. That's your diagonal in 1. That's your triple combination down in 2. 1, 2, W, X, Y, connector X, Z. So you make a triple combo. It really doesn't matter how you label this. It's because the price has so much overlap compared to this move is a bit more directional. So you have 1, 2. This is only a 1 of this 2. And I want you to pay attention to one thing. This price, 333, down to the 0 mark. But stock was almost at 0. You can see it, 0.42. Manage all the way back up to 333 mark. And you think the price goes up like this, and then this is all the high that just made after that many years? I don't think so. The trend resumes on a bigger time frame. So that's your low. So how are you gonna go up in a 1, 2, 3, 4, 5? Do you want to know my target for MSTR? I want you to mark this thing on your chart. I don't know when it's gonna get there, but it will. Yes, your upside target of MSTR is 2046. I can tell you that. Now, this thing can happen next year. It can happen this year. It can happen 5 years from now. It can happen 10 years from now. I don't know that. But this stock will hit 2000. So the stock right now is at 434. You're looking at 3 times more. I mean, five, just going off at 500, 500,000, 1,500, and 2,000. That's three times a little bit more. This run just getting started. I mean, it's gonna have a painful wave two as well once it's gonna complete. There you're gonna get your third of a third breakout. It's gonna take a long time. But if you, I don't know. Well, see, the thing is that everybody just just dying to trade options all the time, and you're gonna you can just buy something, or you can just do IBIT ETF, IBIT. You can do that if, but it has room to run. You don't go out. You don't. It's not how it works. All you do just poke above and you just go like this? No, I don't think so. But we're gonna take one at a time, and this is how I have the way whole thing counted is 1, 2, up in 3, down in 4, and then you just see if you can complete this wave 1. That matches with the second swing with the Bitcoin as well that I'm tracking. Okay, which is this, this. This is a full swing. Then you're gonna have your second swing. Then you're gonna get your third swing to the upside. That second swing will take several weeks and months. Yeah, you don't just quickly get the second dip and then boom. Then you're just gonna get yourself ready for a third of a third breakout to the upside. Yeah, rotation is good. It just Bitcoin played out. It's just because it has a very strong seasonality for November. So I bought them here, back here in September. Right here. Ever since I've been posting this thing to you, I've been here to you guys on Slack, been showing you every single day Bitcoin futures after the close. Then telling people on Twitter, let's go, put something on Bitcoin. But I'm not gonna come and push the button for you. I mean, you gotta pay attention what I'm telling you, what I'm showing you. You gotta push the button on your own. Well, I don't run any kind of a Bitcoin service here. I only do stocks and options for you and stuff. I mean, I happen to start tracking Bitcoin in the last couple months is because I had few things that I really liked. And I wasn't really expecting that thing is gonna explode like this fast. I swear to God, if I would have known this thing will go run like this, oh man. I mean, I put only $50,000 right there on Coinbase. I mean, kind of regret and kind of like I was pretty confident that that will play out, but I wasn't expecting that thing was gonna rip like this. I would have put almost like a $500,000 in the position. I mean, that would be nice. But hey, still called the right move and definitely rewarded me pretty well. So not gonna complain much. It's okay. There's gonna be always another trade. I'll find it. It's the same MSTR. I was doing the same thing on Twitter. It's the same post triangle thrust that we're just looking at it here. I um yeah, it's the same. Well, I had this as a flat. Um, got an A, B, and C, and then from here, this is August 16th. It's the same, like one, two, three. You can clearly see it's just the price is just going sideways. You know you have one here, two here, three here. Three is near the 161.8, right? And then from here, it's the daily wave count anyway. So it's just kind of moving sideways. You look at these highs and lows, call like a double bottom. Okay. That was like 133. I was like, screw it up, buy something. Worst case, I just sit on it. That's all. But I'll just break to the upside. So this is the same thing. And then when it completed, this fourth wave, it's the same right there. One, two, diagonal, one, two, up and three is the same right there. So I had them like A, B, and C. I thought from here we're ready to rip. But then I was like, okay, I'd rather just make the right call with the make a right look with the diagonal. Sorry, the triangle. But this triangle worked so damn well with the time on top of it. Look at this 161.8 on September 6th. Right there, this pink line. And look at this 61.8. Look at this daily bar on this line and look at this fib. That's just and look at this low. That's how you nail time and price. That's that day, September 6th, is where you have your time and your price meets exact, and then from there you take off. That's a pretty good example for you to see. And then from here you look for five waves to the upside, which is called the post triangle thrust. Some of you guys are lucky that you guys are here with me. You don't have, I'm going to tell you one thing though. I don't, when it comes to Elliott wave, you don't have to worry about at all. As long as you're here with me. If you decide to leave, I'm okay with that. That's your call. You do not have to worry about Elliott wave. You just need to decide one thing, that how much risk that you're willing to put on a trade. That's the only job that you need to do. You have to get your mind ready for it next year. You need to decide what calculated risk that you can take on each trade. Entries, levels, stops, I'll handle it. So I might just put this three here, but I don't, I'm just, I'm just gonna watch the this yellow zone for now. We'll give a couple days and see how the price structure resolves here. Because if this fourth right there managed to hold it for a few more days or whatever, it could go another, whatever the time frame. And then from there, you see if you can get one more push right back to the upside toward this fifth wave. If this fourth wave right there starting to come down below this 333 mark that I just showed you before, remember the 333 mark, the previous high, then I gotta move this one up here. And I'm gonna recount the whole thing from the top. Then we can look for this second wave down. That would that will take a long time to complete right there. Which I cannot put this thing yet because I need confirmation from here first, which I don't have it. Okay, so rotation is very strong. November is not over yet. Still got some time. This thing can run on Thanksgiving. So next upside target of Bitcoin is 108. We hit 80, we hit 88, we hit 95 as well. So that's your next fib to the upside is this. It can get there. It might don't get there. It can stop anywhere. It can stop at 105. It doesn't matter. I mean, it just really doesn't matter. But your but your next upside projection is 108 from 95. Okay, so if this thing started over here, is gonna definitely is going to have a response right there because this thing will start to move toward the weakening quadrant. That will definitely will confirm the weakness here. Then I can make a case here, oops, for this, for the Bitcoin and MSTR to both come down in a second, swing at the same time. But don't ask me to update this thing. Give me the update and give me the update. Just I explain everything to you, how what you have to do. Just take a screenshot of it and I'll just update the, I don't have to update anything, but I'll just show it to you. You know exactly where the yellow box is. You know where all the fibs are sitting. You know where the top is, 543. And you just gotta have to see how this thing settles in the next few more days. And if it makes some, it could, fourth waves are nasty. You know that. So, but my MSTR target to the upside is 2000. I can tell you that. And I cannot put a time on it yet, but either we just go straight up from here. I mean, this is gonna be, this is already quite a bit extended compared to, compared to this. We still got, it can run. How much is this? 258, 377. See, it's already big. I know it's gonna be big. This is the three versus one right there from three. Let's see. Yeah, three versus one. So this is four. Then you got the five, a 5 to 1. Then you got the three, and then you got to your 2000 mark. I'm thinking, well, and I gotta open up another position. I mean, we can trade coin, which I opened a position yesterday. A little bit decent, a little bit cheaper experience, the premiums compared to this beast. This one is insane. Um, can do a coin, or I can, I don't know, 434. My 10 shares gonna cost me 43.40. I can do 20 shares on this one. 434 times 20 is 8,680 bucks. Then just have to scale it down. It's just gonna be, I mean, you're not gonna get an $8,000 worth of a option premium on this name unless you're gonna go out to a 5 and 10 delta play. Yeah, I'm not doing that. Um, no, I'd rather just, if you don't do this, we can go, you can do this. There's some guys that are holding this ETF. This is ready. Oh, it's already been ripping. This got this one I put it up on a chart room. We should have this one. Let's see if I can. Yeah, right there. This one is at 51. It's the same thing. You got one down and two, diagonal one, short two, but it fits very shallow two, and now it's just taken off. So this is 51.26. And now 56.48. So it was right around here. Well, right around here. Somebody asked right there. So it's going into into the first zone now, right there. Into this 54, 56, 49 kind of zone, because you see I got the 100, got 161.8 hundreds of these two are, and then from here, if it accelerates to the upside, because this is the third, you can, if you can, how do you know it's a third wave? You see these acceleration gaps here, here, little bit, very tiny here. That's what you get here. Every time you're gonna have a third wave, you're gonna, just because third wave accelerates much on a faster pace, you know. This has to be the longest wave. So it moves on a short period duration, on a short period of time, it's going to travel really fast. And it's going to have acceleration gaps, meaning it opens a gap, it just never fills it, and just keeps on ripping. So 3 versus 1, it's a 71.98. So we're right here, right to that 100 mark. So next one up is 200, 62.46. 62.46 to 3 versus 1 relationship would be a 71.98. Well, then your fourth wave is going to be very shallow compared because your 2 is so small. And then from 4, you get the fifth. Yeah, 11:30. Okay. So we can consider this as an option as well. So it's a lot less exposure, much cheaper. You can own a lot of share, but at the same time, you're gonna have to pump quite a bit of money in order to get a decent return as well. So you see, that's the thing though, because you could have a cheaper price, but you're gonna have to deploy more capital in order to get the same. Like if you buy 100 shares of this of 56.48 times 100 is 56.48. So it's 56.48 of 100 shares here that moves like 3, 4, 5 points. Here you have MSTR. You can buy 10 shares. That sucker moves 60, 70 points in one shot. You're going to make 660 points, but 10 is like 600 bucks right there. You see, the point is like, you just gotta have to see what makes sense. And but one side one side you're playing much extreme volatility versus ETF is gonna be a little bit more steady. Is gonna be crawling up with a bit of a slower pace, unless if it is a third wave, then you're just gonna rip hard. So it's just a matter of like catching a third wave to the upside. So I mean, same thing I just said before. Here's your high, that's the low, that's the high. Here goes the downside. Price managed to went right back to the highs right there, and look what happens. So if this is all is after spending this much time going sideways for almost a year, and somebody is gonna tell me that you spend 2000 high from 2024, that's 24 years, and you're gonna break a 24-year-old high for 1 week. Really? This guy Sailor who's pumping money in the Bitcoin, he's playing the game. His reward is gonna be massive, but he's long term, so he's thinking, how is he borrowing money on a convertible note that's 0%? It's unbelievable. And this guy has issued. Did you see the video that I shared on the community charts yesterday? Right there. Watch this video. It'll explain you exactly what they're doing. How he's hedging his MSTR position is unbelievable. He borrowed money at 0%. He has an upside exposure Upside pays him 10 times more. Okay. Downside goes down. He still makes money as well. So he has stocks that I can go 10 times more, which he knows it has more volatility, right? Compared to his bond. Bond, he has a 0%. He did four of them this year. I mean, this guy's playing this unbelievable game. He has a downside protection, but he has 10 times more upside compared to his downside limit. He still makes money if the stock falls, but he makes 10 times more if the stock goes up. Watch the video. You get a chance. And there's guys out there saying like it doesn't make any sense. Yeah, because you're not in it. That's why. Nothing makes sense. If you ever missed out on a move. It's always like this. Whoever guy is not in a stock is always gonna talk shit on a Twitter all day long. You know? Oh, this is a bubble. Oh, this and this. Oh, Nvidia is another Cisco. Market is a bubble. That's all you see. I'm not saying that the market is not going to correct. It will. Of course it will. Because you know that and I know that there's no such a thing goes up in a straight line. We had 5, 6, 10% dips. What do you think? We're not gonna have another one? 100% we will. Well, that's what most more people are looking for. This is whatever 9.7. Like we're gonna have some of these again, like this dip, like this. Rest of them are pretty small. But everybody is so focused on this is the top, this is the top, this is the top, this is the top. Like, well, keep burning cash. I mean, I can run upsides and things like this, all the projections, which is all good, but at the same time, I mean, I don't want to. Economy is great. I mean, I mean, Trump is coming with his new policies. He's gonna hurt the market with tariffs, but he's at the same time he's gonna be watching the market like every day, like he normally does. Every day he's gonna be watching the market. Then he's gonna post a comment like, "Hey, look how great the stock market is doing under my term." You see, and you're dreaming of a crash. I mean, I don't know. It's hard to predict. Future is not written, but Wall Street loves this guy. That's why the market rallies so hard from here to this. That's the election pump right there that we had. And he's going to give all these corporates tax breaks. What do you think is going to do to their earnings and to their balance sheet? Recession is coming. Recession is coming. We can have a recession for 10% dip. Doesn't mean the market is going to fall off a freaking wall. I mean, the world is going to end. They just want the recession mark. Oh, look at the previous recessions. How many dips do we have? 10%, 11%, 12%, 13%. I'll handle that. I'll handle it. Well, we all will. Not a problem. Well, if you are just like thinking like, oh, I want to be in the next 10% dip, well, but then you just thinking about the imaginary tops in your head every single day. Yeah, good luck with that. Yeah, it's not how it works. I'll show I spend a lot of time here. Pretty much all day I spend on this. I there are signs of weakness I will see across different asset class. I don't see it yet. When I do, I will let you know. But I I just don't see it. It doesn't mean that volatility cannot spike. It can spike tomorrow based on any news or whatever, but the this market has room to run. Look at the healthcare is the worst one for the year. Qs, S&P, boom, boom, boom. I keep pushing. I want to get my S and I want to get my I want to get my S&P to 7,000 plus. That would be really nice. Which was this. There we go. This close to like 8,000. It's a smaller one anyway. It's going to be extended fifth. So yeah, plenty of room. Don't worry about it. I showed you this thing before. I don't know if some of you guys know. This is an S&P when it was 16 bucks. Smaller wave one, bigger wave five. Smaller wave one, extended fifth wave. Smaller wave one, extended fifth wave. It's repeating over and over again. Nobody sees it. It's your fault. I'm staying long. You can do whatever you want to do with yours. I know how Elliot works, and I believe what I do. So okay. All right. My wife is calling me downstairs for breakfast. So all right. Um, we gotta shut it off here. Stop the recording.